Hi, welcome to SAP Finance course. In this section, we will discuss and configure and also business process testing of asset management module. Now, asset management module is a separate sub-module of the finance module, a very important module to manage the assets, fixed assets in SAP. Course agenda is as there on the slide. A management overview, master records, acquisitions and maintenance, asset transactions, asset retirement, depreciation, and finally reporting of the fixed assets. So what is asset management? Asset management module helps in creation and monitoring of the fixed assets in SAP. Asset management module helps calculate and post depreciation on fixed assets in SP. It helps in overall lifecycle management of fixed assets like its acquisition, retirement, transfers, intercompany, intracompany, write-ups or write-downs, and reporting. Now, there are certain key terms in the asset management module. Let's look at them. Asset class. Well, asset class is assets. When we create assets, they are grouped under asset classes, or they are actually created under asset classes. I purchase a computer, I will create another asset class called computers. There could be a computer 1, computer 2, desktop computers. All of them can be created under asset class called computer. I purchase a furniture, let's say a computer table. This will be created under the asset class furniture, not under the asset class computer. So let's read what the asset class is. Asset class is grouping of fixed assets according to the assets characteristics like furniture, vehicle, laptop, etc. Every asset is assigned to an asset class. Asset class, very importantly, controls the depreciation method of the asset. So in the asset class, there is something called account determination, which is assigned to the asset class when we create the asset class. And to the account determination, we have the GL accounts linked. So asset class also determine when acquisition is made of an asset to which GL account this entry will go. We will look in all these aspects later in our course, later in this section. Also, we will look in the SAP these areas. Next item is asset master record. Asset master record stores all relevant information of an asset like asset description, cost center, asset class, etc. So asset class is something when you create an asset, you create the asset under certain asset class. Asset master record is master data of the asset. It has the asset description, the cost center under which the asset is getting created, maybe the vendor from which the asset will be purchased, the depreciation terms which will be used for depreciating the assets, and so on. We will look at these aspects in the SAP. Next is asset under construction. So many times companies construct the assets on their own. These are called asset under construction. A very important feature of asset under construction, since they are not completed, not in service, no depreciation is charged on asset under construction. Capitalization. This is the date on which the asset comes into the service. It starts giving service to the company. This is the date of capitalization. Capitalization, the depreciation on an asset is charged from the date of capitalization. Chart of depreciation. This is another important feature of the asset management module. Now, it may happen we need to report the fixed assets as per various reporting requirements like GAAP, US GAAP, IFRS, IAS, International Accounting Standards, so on. Now, taxation purpose. So what happens with these different requirements? The depreciation on the asset is calculated with a different method. For example, for taxation purpose, depreciation may be calculated on an asset based on a reducing balance method. But for the Companies Act or statutory purpose, depreciation will be calculated on asset on another method called straight line method. So the asset value is different in these two cases. For this, we have chart of depreciation, which one chart of depreciation for the Companies Act, which will have the asset value as per straight line method. Another chart of depreciation for taxation purpose, which has asset value as per reducing balance method. Depreciation key, very important aspect of the asset management module assigned to the asset in the asset class. This determines the depreciation method and the amount of depreciation charged on an asset. Let's look at the life cycle of a fixed asset. It starts with the acquisition of the asset. Acquisition of asset, purchase from an external vendor, or there is an internal acquisition, like there is an asset under construction which is completed and put into service. So internal acquisition or external acquisition. Once the asset is in the service, we start using it. There is a normal wear and tear of the asset due to this use. This is called depreciation. So charge of depreciation on the asset during its life cycle, during its lifetime. Third, revaluation. It may many times happen that there is an excess depreciation, excess wear and tear of the asset. For example, we are charging depreciation as 10%, but we think the market value of the asset is much less than what is there in the books because of the excess wear and tear. So you want to write down the value. That is called revaluation. We put extra depreciation. This is called unplanned depreciation, and the asset value come down. Second time, another example could be there is some accident in the factory. Could be a small fire which has damaged the asset. We can still use the asset, but the market value has gone down significantly, and we have to give it extra depreciation for this reduction due to the accident. That's again a revaluation of the asset. In some time it may happen we have to revalue the asset up, so that's a write-up of the asset. Next aspect of the asset life cycle is transfers. Now, transfer of the asset can happen within the company code or outside the company code. Within the company code, asset is, let's say, in a cost center 1000. Now this asset has to be moved to another cost center 2000. So that's an intra-company transfer. We will move the asset from one cost center to another cost center in the SAP. Other thing could be this company sells the asset to another company code, to another company code. That's called intercompany asset transfer. And finally, the last piece is the retirement. Retirement can happen when the asset has completed its life cycle, or there may be some other reason. Let's say when the asset has completed its life cycle, it is retired through scrapping, or it is sold for cash, or it is also possible the asset is no longer required by us, its use, so we sell it off to an external vendor. So again, it is sold to an external vendor for some cash. That completes the life cycle of fixed asset. In the next lecture, we will discuss more areas of asset and then start creating the various items like asset master record, asset class, asset acquisition in SAP.